Hey all, today I'm going to be answering one of your most burning questions. No, unfortunately I don't know when the lockdown's going to end, but I am going to be talking to you today about whether the stock market is going to crash again, whether we're going to see an even worse fall than we saw in February and March, or whether we're past the worst of it. This video will help you to decide whether you should invest in the stock market right now, or wait a little while longer and weather the storm, as it were. If you enjoy the video, or find it useful at all, be sure to drop a like down below and subscribe to the channel. Now let's get into the video. So we can see that the S&P 500 fell from its highs in February of 3350 to 3400 all the way down to the lows of 2200 to 2250 on the 23rd of March. This is about a 33% drop, and that's bigger than the drop that we saw in 2008, which was about a 27% drop in a similar time frame of only about a month. This is the biggest 1 month drop in the S&P 500 history. The market has actually recovered a bit since then, back up to around about 2850 at the time of making this video. So what happened? Is the market going to continue rising, or is it going to all come crashing back down? Just a quick disclaimer as well before we get into the video. I'm not actually a chartered financial advisor, I'm just a guy that makes videos on the internet. So bear that in mind. So the first question you might be asking is, why is the market even rising? Why is it even starting to recover? We're in the midst of the crisis at the moment, and it seems to be getting worse every single day rather than getting better. It's well known that unemployment has been continually rising. In the UK, unemployment is about 4%, but this is being propped up by the government's job retention scheme, where the UK government are paying people's wages. It's estimated that if this scheme ends in October, that unemployment could jump up to about 10% of the entire workforce. The US are faring even worse. It was recently announced that there's about 30 million people unemployed in the US, and this figure is rising by about 4 million people a week, which is an alarming increase. But yet, the market keeps rising. So why is this? So the market is like a collective opinion of every single person that invests in it. And depending on what the general consensus of those people is, the market reacts to it. It goes up or down. So let's take unemployment for example. The people and the market have made a general consensus or an expectation of what unemployment is going to be for the coming week. And then when the actual figure is released, the market reacts to that positively or negatively. Let's take the US for example. Let's say the market has priced itself based on everyone's collective opinion for there to be 5 million job losses next week. Let's say the actual figure comes out and the number is only 4 million. That's technically a good thing because it's a better case scenario, and therefore the market actually moves upwards. The market moves upwards because there's not actually been as many job losses as everyone thought there would be, which is a good thing, and that could show that unemployment's slowing down, and therefore obviously the market continues to recover a bit more. But there's a whole lot more than just unemployment that causes the stock market to move. Especially at the moment, the big things are cure progression and stimulus updates, and whether those updates protect the country more or put it at a greater risk. However, I think the most important thing that we need to consider is how much longer the lockdown's actually going to last. Because if the lockdown lasts more than a few more months, everything starts to become amplified. Unemployment's going to continue rising, and it's going to take people a lot longer to get back to everyday life and get back to their jobs. This is going to cause a number of issues, because during lockdown people are going to need to spend money on the essentials such as food and gas. And that means that after the lockdown, people aren't going to have as much money to go out and buy general things, because that's going to help stimulate the economy. And obviously if people don't have that kind of money to go out and buy those things, the economy is going to recover a lot slower. Businesses are also continuing to spend money during lockdown, and therefore if the lockdown lasts much longer, there's going to be a much greater and potentially irreparable damage done to a lot of businesses. And that means that the world economic recovery, instead of doing a quick V-shape where we have a quick dip down and then a quick recovery back upwards, it's going to be a much more of a prolonged U-shape where we have this sharp dip down and then a long plateau at the bottom before recovering back up. Now I think the next most important thing to talk about is that we're in very uncharted waters here at the moment. This is a black swan event. We as people have never really experienced anything like this, and that's why the whole world doesn't really know how to react. And that's why we're seeing such significant intraday movements in the whole stock market every single day. A few months ago, it would be the norm to see a 0.1 or a 0.2% in the market, whereas now we're seeing 2, 3, 5% movements every single day. It's not as if some form of credit bubble has burst. which the world has experience in tackling. You cut interest rates to spur on investment, and then raise the interest rates back up to curb any runaway inflation. The world has experience in dealing with a credit bubble burst and how you can remedy it. But what the world doesn't have experience with is thousands and thousands of businesses having to stop trading, not because they've run out of cash or can't get any, but because they're physically not allowed to trade because of the illness. And I think because the world doesn't really know how to react, that's why we're seeing some unusual movements in the market. And also why a lot of people might be confused about whether the market's continuing to recover or whether it's just about to crash again. If you've enjoyed the video so far, leave a comment below letting me know your prediction. Do you see a double drop in the market, or do you expect a continued recovery? Now let's talk about some other reasons for the current market recovery. I mentioned earlier about cure progression. When news first broke of corona, early estimates were that it could take up to 18 months to have a cure found, manufactured, and distributed to the people. We're currently only about 3 months into the crisis, and there's already news of drugs like remdesivir already going into production. And I think because we're beating this market estimate, the market's reacted well and has started to recover. Now I think the timing of the manufacture and the distribution and the actual confidence in this cure is really key. If the cure comes out in the next couple of months and is widely distributed, and it's a very well researched cure and that the expectation for side effects are slim to none, I think we could see the market continue to recover even faster. But if this cure takes another 6, 12 or 18 months, and there's a lot of nasty side effects that come with it as well, I think we can definitely expect that unemployment is going to continue to rise and that a lot of businesses are going to fail. I think we can almost definitely expect a double dip in the market, maybe one that's even more significant than the one that we had in February and March. I also mentioned about the stimulus packages. The UK government has announced that it's going to continue to pay 80% of people's wages, which will help prevent unemployment. The US has announced over $2 trillion in stimulus packages and is expecting to pay the US population about $2,000 a month so that they can continue buying necessary things like food and gas and just other necessities. This is obviously instilling confidence into the market because it shows that hopefully not many businesses are going to fail because obviously the businesses and the population are being supported. Now this is causing a lot of new money to be printed and a lot of new money to flow into the economy. This is good because it helps keep businesses afloat and it helps them continue spending. But this is bad because new money like this can cause currency devaluation, and an increase in government spending of this kind is likely to lead to an increase in taxes in the future. Now I think if the crisis is resolved fairly soon, we could see a fairly quick recovery in the markets. Some businesses are going to fail, but it's likely that these businesses are probably teetering on the edge anyway. But most businesses are going to be able to escape fairly unscathed. Most employees are going to be able to get their job back, and therefore we'll be able to see that kind of V-shaped recovery with a quick dip down and a quick recovery back upwards. And unemployment, while it's shooting now, is likely to return back to where it left off quite quickly. But I think if the crisis isn't resolved soon, then similar to the second wave of the virus, we could definitely see a second wave of the markets crashing. From the lows on the 23rd of March, the S&P 500 had recovered about half of its drop in only about a month, which is the 23rd of April. Now the market's largely been kind of trading in that kind of range since then, but obviously based on that previous growth, the market's probably only expecting about another month or two of this crisis. And that's obviously why if it's going to take a lot longer than another month or two, then we could probably see another sharp, severe drop, because obviously the market will have recovered back to its February highs, but the crisis won't be over. And obviously if the market has risen back to its February highs, but we're still seeing businesses failing, and we're seeing more secure businesses failing, and we're seeing unemployment rising, savings dwindling, and personal debt mounting, it's likely that the markets are going to have an even more severe crash. I reckon based on this circumstance, the world really would change a lot, because a lot of businesses will end up needing government bailouts, and that will change the way businesses operate. Because obviously if the government takes a stake in the business, it can restrict what a business can and can't do. Now another interesting thought or theory that I have is that the stock market is being almost controlled by its investors and their investing practices, and not necessarily by the crisis. In February and March, we saw the stock market really tank, and a lot of investors, including myself, were out looking for good deals and trying to pick up a lot of stocks at a cheap price. And because everyone was out there trying to buy the bottom, this massively increases the demand for the stock and shoots the price up. And then everyone else starts to FOMO, which is the fear of missing out, and jumps in as well and buys that stock, which then continues to push the price of that even higher. So it will be really interesting to see whether this is artificial confidence inspired by those people FOMOing back into the market, or whether this is genuine confidence based on the stimulus and the cure progression and the unemployment numbers being better than the rest of the market actually expected. And I think this will all really boil down to how well the world deals with the virus. If it's over in the next 2 to 3 months, then I think we could see quite a quick recovery. But obviously if it takes another 6 to 18 months, I think we could definitely see a double dip in the market, because it'll obviously mean that we're still in the very, very early days of the crisis. So I guess it kind of depends on the confidence that you have for our frontline workers, for our doctors and our medics on the front line that are battling this illness, and also the scientists that are pioneering their way to a cure. As always, if you want to learn more about investing in the stock market or investing in property, then be sure to watch some of my other videos. Alternatively, subscribe to the channel and ding the notification bell. That way, you'll be alerted when I upload a new video. Cheers!